Hello everyone, welcome to OptionGig. This is your host Vivek, part-time option trader and full-time worker, husband and father. If you also want to generate consistent monthly income trading options while working in your regular day job, then join me in this journey. Okay, before we get into the details of how to manage losing trades, first let's do a quick recap of why we should manage trades. Two big reasons on why we should manage trades. Number one, it can convert losers into winners. If your manager trades well, a trade that might look like a loser right now, you can convert that into winner. Or sometimes if you're not able to convert it into a winner trade, you will at least be able to reduce the loss. And mind you, we do all these things without adding any additional risk to the trade. Ain't that wonderful? That's the reason why I always focus on managing trades. And I think this is one step which differentiate a seasoned option traders from a newbie option trader. All right, so we talked about two techniques already. Number one technique was to extend the duration, and second technique was to roll up or down the unchallenged side. If you have not seen the videos around technique 1 and technique 2, I would request you stop right here. Do not proceed further until you have seen these two techniques, because your go-to techniques in case of trade management will be these two: either extend duration or roll up or roll down the unchallenged side. If none of these work, then only we should use the technique number 3, which I'm gonna talk about in a few seconds. So take a pause, go back to my YouTube channel or to my website www.optiongig.com and learn about technique 1 and technique 2 and then come back. All right, so since you have decided to continue on this, I am assuming that you know about technique 1 and technique 2. So let's talk about the third one. Now the third technique is called go inverted, and it is built on top of second technique. Okay, as you have noticed in technique number 2, which is rolling up or rolling down the untested side or unchallenged side, we start with the same step. We start with rolling up or down the untested side, and let's say once we roll it, stock is still not cooperating, we roll it again. So in this technique, we roll it multiple times. We roll it so many times that now suddenly the unchallenged side has gone across the challenged side. For example, if we are rolling down your call because your stock has gone below and it has started to challenge your put, in technique number 2, you will roll down your call. Now, stock is still not cooperating, you roll it down again. Stock is still not cooperating, you roll it down again. And whenever you do these rolls, every time you collect additional credit. Stock is still not cooperating, you roll it down again. Now you roll your call down so many times that now it is below your short put. It has gone across your short put. In the other case, if you are rolling up your put, same situation applies. You roll up your put to bring your short put closer to your short call. Again roll up your put, maybe bring it equal to your short call. Then you again roll up your put. Now your put has become higher than your short call. That is why we call it inverted. Okay, let's take an example. I think that will be much clearer to you. Let's continue with the same example that we have done in technique number 2 with my favorite stock XYZ. Let's say today the stock is trading at 100 and you had a short strangle, means you had sold a put at 90 and you had sold a call at 110. Stock is right in the middle at $100. Let's say stock goes down to 90. So as a step 1, which is technique number 2, you roll down the short call from 110 to 100. That means you close the 110 short call and open a new short call at 100. When you do this, you collect a premium. Let's say you collect $3 premium, and that will widen your break even on the put side. Now comes the example of going inverted. So that was technique number 2. Let's say the stock continues to challenge, and now from 90 it has gone down to 85. Now your stock is beyond, it is lower than your short put. So what do? You could roll down your call to 87. Either you could do directly to 87. In some cases you may want to roll down your call from 100 to 90 first, and maybe then you roll down from 90 to 87. But just for sake of simplicity, in this example, I am considering that you roll down your call directly from 100 to 87. Remember, the stock is at 85, so your 100 short call is almost worthless. So you could close it just for pennies and open up a new short call at 87 for much bigger credit. And let's assume that you get $2 of additional credit for doing this. Now your short put is at 90 and your short call is at 87. This is called going inverted because your call is lower than your short put. Generally, when we open up a trade, our call is always higher than the stock price, and a put is lower than the stock price, means a put is always lower than the call. That's our normal trade. This becomes inverted because your call is lower than your put. And in this case, an important term to note is that the width of your inversion means how much is your trade inverted by. That is determined by the difference between your short call and short put. In this case, your width of inversion is $3 because your put is at 90 and your call is at 87. Okay, let me show you how it will look like, when you start a strangle, and then how the whole flow happens. All right, so let's say this is your trade to begin with. Stock was trading at 100. You had your put at 90 and your call was at 110. Okay. Now the stock then moved down. Say the stock moved down from 100 to 90. So in this case, the stock is at 90, and what you gotta do is, in the first step, you roll down your call, means you close this call and you roll it down to 100. So now your new trade is like this. Your short put is at 90, your short call is at 100, so your new trade is like this. See, you excuse me, you widened your break even by $3 because when you rolled it down, you collected $3 of additional premium. Okay. All right, let's say the stock doesn't cooperate, still stubborn, and it continues to go down. And let's say, as we have talked about in our example, the stock is now at 85. Let's say this is 85. Your stock is now trading at 85. Your put was here at 90. Stock is trading at 85. What do? You roll down your call further from 100 now to 87. So from 100 you had your call, you roll it down to 87, let's say somewhere here. So now your call is at 87. Your put continues to stay here at 90. So in this case, your trade will look like something like this. Just look at the blue line. Okay, now I will draw it again just to make sure that it is very clear. Call is here at 87. Your put is here at 90. Stock is here at 85. So this is how your trade will look like. Now totally, let's say when you did your initial trade, you collected $5. When you roll down the call from 110 to 100, you collected additional $3. Then you roll down your call from 100 to 87, you collected additional $2. So totally you have collected $10 of premium. So your break even will be, on the put side, it will be 90 minus 10, which is $80. This is your break even. On the call side, it would be 87 plus $10, which is 97. So this is 97, this is 80, this is your break even. Now this $3 is your width of inversion. Now anytime when you have to close this trade, it will trade minimum for $3. The best scenario for you in this case would be that the stock cooperates and land somewhere in between these two. So if stock comes back between 87 and 90, let's say stock is here, you can close this trade for $3. But remember, you have taken $10 as a premium. If you close it at $3, you will be able to exit the trade with $7 profit. So that's all is about, going inverted and collecting little more additional premium. Okay. All right, so quick takeaways. You should only go inverted only if the first two techniques have failed. Either you are not able to extend the duration for credit, or if you have not able to just roll it once and been able to close the trade profitably, then you go for your inversion. Now the width of inversion is equal to the difference between the strike prices of call and put that we already talked about. And this spread will be trading at least for the width of the inversion. Like I explained, the minimum value of this inverted trade would be $3. So if you have to close this inverted trade, you will have to spend minimum $3. That means we should never go inverted more than what the total credits that we have collected. In the example that we have seen, in this case we have collected total $10 as a premium. So at the worst case, we could have gone or rolled down or call all the way up to $80, because that in that case my width of inversion would have been $10, and the $10 is the premium that I have collected. Maybe add any additional $1 premium for rolling down further from 87 to 80. So let's say $11, and I've gone $11 width. That is my break even, because even if the stock cooperates and land between my inversion strikes, in that case I will exit this trade at no profit, no loss. But if you go inverted more than the amount of credit that you have collected, in that case you are actually locking the losses. What do I mean by that? In this case, the case that we just saw, let's say you have gone inverted by $12 and the total premium you had collected is $10. Now the best case scenario for you is for the stock to come back and land between your two short strikes. Let's say stock cooperates. It lands between the two short strikes, between the strikes of your call and the strikes of your put. That's the best case scenario. Stock cooperates. So now you can close the trade because that's the best case scenario. But for you to close the trade, you will be able to close it only for minimum of $12 because that is the width of the inversion. But you collected only $10 premium. Right? So means your minimum loss in this case is $2. So I don't suggest that in your endeavor to collect more premium, you go so far inverted that you have just given up on the trade and you have locked in losses, even if stock cooperates. So always take a note that you should only go inverted at the max equal to the amount of credit that you have collected, so that if stock cooperates, you can still break even. Ideally, I leave some room for profit, so generally the width of inversion will be less than the amount of credits that I have collected, so that if stock cooperates, I can still exit this trade at small profit. So that's all about technique number 3, which is going inverted. I know this is a little more involved than the other 2 techniques that we have seen, but this will be very, very useful if the market continues to go against you. So go through this video again if you're not clear, or you can write it to me either in the comments if you're watching it on YouTube, or if you're watching it on my website, provide me a comment there, or you can email it to me at optiongig@gmail.com if you have any questions. Please note that all the information presented is purely for educational purposes and is not a financial or investment advice. I don't know you, you don't know me, so do yourself a favor and don't invest or trade solely based on what you hear.